Hey everyone, it's Manohar Reddy, and let's be real for a second. The world of investing can feel like a chaotic casino. You've got charts bouncing around like a ping-pong match, cryptic financial jargon thrown around like it's everyone's native language, and don't even get me started on the emotional roller coaster that comes with it all. But here's the thing, it doesn't have to be that way. You don't need to be a Wall Street hotshot or a crypto whisperer to build long-term wealth. In fact, some of the safest investments out there are also some of the most straightforward. So, if you're ready to escape the noise and build a rock-solid financial future, stick around, because in this video, we're diving deep into the top 5 safe investments that can help you crush your financial goals in 2025 and beyond. Let's get it. Alright, let's kick things off with a classic, the high-yield savings account. This might not sound thrilling at first, but stick with me. Now I know what you're thinking. Manohar, savings accounts? Really? That's boring. Listen, I get it. They don't have the allure of stocks or the excitement of crypto. They're not exactly the sexiest investment out there. But hear me out, because these bad boys pack a surprising punch. They are more powerful than you might think. First off, with interest rates going up, we're seeing some online banks offering a juicy 5% APY or more on these accounts. That's a significant return for a low-risk investment. Think about that for a second, 5% guaranteed returns year after year. It's a steady and reliable way to grow your money. That's right, no market crashes to worry about, no fear of waking up to see your money vanished into thin air. It's peace of mind in a volatile world. And the best part? Your money is FDIC insured up to $250,000 per account. This means your savings are protected by the full faith and credit of the US government. That means Uncle Sam himself has your back, guaranteeing the safety of your hard-earned cash. It's like having a financial guardian angel. It's like having a financial fortress protecting your savings. Your money is safe and sound. Now I know what you're thinking. 5% isn't going to make me rich, Manohar, and you're right, it won't. But that's not the point of a high-yield savings account. It's about stability and security. This is your financial foundation, the bedrock upon which you build your financial future. This is where you park your emergency fund, your short-term savings goals, the money you absolutely can't afford to lose. It's your safety net. Think of it like this. Would you build a house on a foundation of sand? Of course not, of course not. You'd use concrete, something strong, reliable, and unshakable. That's what you need for your finances too. That's what a high-yield savings account is. Your financial bedrock. It's the solid ground you can rely on. And while 5% might not sound like much, it sure beats the 0.01% you're probably earning in that traditional bank account. It's a significant improvement. Look, every dollar you earn in interest is a dollar working for you, compounding over time. It's your money making more money. It might not seem like much in the beginning, but trust me, the power of compound interest is a force to be reckoned with. Over time, it can lead to substantial growth. So, if you're looking for a safe, reliable, and surprisingly lucrative place to park your cash, look no further than a high-yield savings account. It's a smart choice. It's the financial equivalent of a warm, comforting hug, a place where your money feels safe and appreciated. Next up, let's talk about CDs, or certificates of deposit, for those who like to keep things official. These financial instruments are a great way to ensure your money works for you while you sit back and relax. Now, CDs are like the slightly more mature older sibling of the high-yield savings account. They offer a similar level of security but with a little twist. You're locking your money in for a predetermined period. They offer a similar level of security, but with a little twist. You're locking your money in for a predetermined period. This means you can't touch it until the term is up, but the rewards can be worth the wait. Think of it like this. You're basically loaning your money to a bank for a set amount of time, and in exchange, they promise to pay you a fixed interest rate. It's a win-win situation if you can afford to let your money sit for a while. Now these terms can vary, ranging anywhere from a few months to several years. You've got options, people. Whether you're looking for a short-term commitment or a long-term investment, there's likely a CD that fits your needs. But here's the beauty of CDs. Because you're committing to a longer time frame, banks are often willing to offer you a higher interest rate compared to a traditional savings account. The longer you commit, the higher the potential returns. We're talking potentially even more than that 5% we talked about earlier. Imagine the possibilities of growing your savings with such attractive rates. Now, I know what you're thinking. Manohar, locking my money away sounds scary. And I get it. Commitment can be intimidating. And I get it. Commitment can be intimidating. But that's where the beauty of CDs comes in. They offer something that's becoming increasingly rare in today's volatile market predictability. With a CD, you know exactly what interest rate you're getting and for how long. It's like having a financial roadmap, allowing you to plan your financial future with confidence. It's like having a financial roadmap, allowing you to plan your financial future with confidence. No more market swings keeping you up at night. No more algorithm-driven roller coasters. No more market swings keeping you up at night. No more algorithm-driven roller coasters. Just pure, simple, guaranteed growth. Just pure, simple, guaranteed growth. But here's the catch. If you need to access your money before the CD matures, you'll likely get hit with an early withdrawal penalty. But here's the catch. If you need to access your money before the CD matures, you'll likely get hit with an early withdrawal penalty. Think of it like a financial speeding ticket. Think of it like a financial speeding ticket. So, before you dive headfirst into the world of CDs, make sure you're comfortable parting ways with that cash for the duration of the term. So, before you dive headfirst into the world of CDs, make sure you're comfortable parting ways with that cash for the duration of the term. Overall, CDs are a fantastic option for those looking for a safe and predictable way to grow their money over the medium term. Overall, CDs are a fantastic option for those looking for a safe and predictable way to grow their money over the medium term. They're like the reliable friend who always shows up on time, offering peace of mind and financial security. They're like the reliable friend who always shows up on time, offering peace of mind and financial security. So if you're looking for a stable and secure investment, consider adding a CD to your financial portfolio. Alright, moving on to a slightly more adventurous option index funds. Now, before you start picturing Wall Street wolves in fancy suits, let me break it down for you. Index funds are like the chill, diversified friends of the investment world. Instead of trying to pick individual stocks like you're playing financial darts, index funds allow you to invest in a basket of stocks that track a specific market index, like the S&P 500. Think of it like buying a slice of the entire pie instead of trying to pick out the best individual cherries. Now, the beauty of index funds lies in their simplicity and diversification. By spreading your money across hundreds, even thousands of stocks, you're essentially mitigating your risk. It's like that old saying, don't put all your eggs in one basket. And the best part? Index funds are the full faith and credit of the United States. They've got a pretty solid track record of paying back their debts, even if they do have a knack for racking them up. This reliability is what makes them so appealing to conservative investors. Now, depending on the type of bond and the maturity date, you can lock in a fixed interest rate for anywhere from a few months to 30 years. This flexibility allows you to tailor your investments to your financial goals. And while the returns might not be as flashy as some high-flying tech stocks, they offer something far more valuable: peace of mind. Knowing your money is safe can be priceless. Think of U.S. Treasury bonds as the calm amidst the storm. They provide a stable foundation for your portfolio, especially during turbulent times. While the stock market might be having a meltdown, your bonds are chilling out in your portfolio, providing a steady stream of income and preserving your capital. This stability can be a lifesaver during market downturns. Now, it's important to note that even U.S. Treasury bonds come with a teeny-tiny bit of risk. No investment is completely without risk after all. We're talking about inflation risk, which means that if inflation rises faster than the interest rate you're earning on your bond, your purchasing power could take a hit. This is something to keep in mind when planning your investments. But even with that small caveat, U.S. Treasury bonds remain one of the safest investments on the planet. Their security and reliability are hard to beat. They're like the financial equivalent of a warm blanket on a cold winter's night, providing comfort, stability, and a whole lot of financial security. So if you're looking for a safe haven for your money, U.S. Treasury bonds might just be the answer. Last but not least, let's talk about REITs, or real estate investment trusts. Now, we all know that real estate can be a fantastic investment, but let's be real, not everyone has the time, money, or desire to become a landlord. That's where REITs come in. REITs are like the hassle-free way to invest in real estate. They're companies that own, operate, or finance income-producing properties like apartment buildings, shopping malls, and office spaces. Think of them as the real estate moguls of the stock market. Now, the beauty of REITs is that they allow you to invest in real estate without actually having to buy, manage, or maintain any property. No more late-night calls from tenants, no more dealing with leaky faucets, just pure passive real estate investing. And here's the kicker. REITs are legally required to distribute at least 90% of their taxable income to shareholders in the form of dividends. That's right, we're talking about a steady stream of passive income flowing directly into your pocket. Now, like any investment, REITs do come with some risks. The real estate market can be cyclical, meaning it goes up and down, and REIT prices can fluctuate along with it. But over the long term, real estate has historically been a solid investment, providing both appreciation and passive income. So if you're looking for a way to diversify your portfolio, potentially boost your returns, and tap into the lucrative world of real estate, without the hassle, REITs might just be your new best friend. They're like the key to unlocking the real estate kingdom without having to slay any dragons. There you have it, folks. 5 safe investments that can help you weather any financial storm. Remember, building long-term wealth doesn't require taking unnecessary risks. It's about making smart strategic decisions that align with your goals and risk tolerance. So whether you're just starting out or you're a seasoned investor looking for a safe place to park your cash, consider adding these 5 investments to your arsenal. And as always, remember to diversify, stay consistent, and never stop learning. The world of finance is constantly evolving, and the best way to stay ahead of the curve is to never stop educating yourself.